Hello, good afternoon. Welcome to Your Stocks, coming live from the CNBC-TV18 Motilal Oswal studios. I'm Vinny Motiwala. Thank you so much, as always, for tuning in. And a good day turning up for the markets as well. 26,180-190 levels is where the Nifty is managing to trade at today. Right now, 1.17% of gain is what we're seeing for the Nifty. 300 points uptick. Day's highest point again. You just see that minor blip that came in, and then again, there's no stopping the markets today. We'll watch out for the second half of the trading session, because where that's going to be headed, do we see a fall again like we've seen in the past few trading sessions, is something that we'll be keeping an eye out on. But support coming in from the Nifty IT, Nifty Bank, both of them as a sector-wise overall are managing to hold on to very strong gains of more than 1% here. So look at Nifty IT also trading at the day's highest point. Nifty Bank also managing to hold on to strong gains. Now, in terms of the Nifty mid-cap or the broader end of the market, that's doing well in tandem with the benchmark indices. Nifty mid-cap up almost 1.2% as well, 1.1% as well right now. So keep an eye on that one. Small cap too is managing to hold on to gains of 1.2% in today's trading session. So good day coming in for the markets. Advance decline ratio today clearly in the favor of advances versus declines, so no complaining on that front. Good day for the markets. But this is a show where we solve all your stock related queries. And we do have our experts joining in with us today. We have Somil Mehta, Head of Alternate Research, Capital Market Strategy at Mirae Asset Sharekhan, as well as Sachin, Jasuja, who is the Head of Equities and founding partner at Centricity WealthTech, to answer all the stock-related queries. Sachin as well as Somil, good afternoon. Thank you so much for joining us on the show. Let's get started with those stock-related queries. We have the first query. This is an investment query today, and it's from Mehul Shah, who's writing to us from Ahmedabad. Wants to know if they can look to invest and buy Tata Capital at current levels. Sachin, afternoon. What's your view on Tata Capital? Should the viewer buy them? Long-term query as well as short-term, both views.
Good afternoon, and thank you for having me. So Tata Capital is the third largest NBFC. It's a very high quality NBFC in India. So recently, the IPO came, and I think it is reasonably priced. The way the company has grown, it has got the diversified, loan book across retail, SME, corporate, and they have been growing by more than 30%. If we compare the valuations with the largest of the players, like Bajaj Finance, Geofin, or even Cholamandalam Finance. So I think every company is trading, at price to book value more than 4. If you compare with the larger names like Bajaj Finance and specifically with Cholamandalam Finance for the, peer comparisons, if we can take. So that Tata Capital is trading at around 3.8. So very comfortable valuations coming from the parent group, strong parent group Tata, and a lot of headway for the growth. Even the credit uptick is already coming in India from that perspective. So from short term perspective also, we feel that the base is there. It is trading near the IPO price, and the company can continue to grow by more than 15 to 20%. So even for the long term perspective, I think one can bet on Tata Capital.
Okay, good on the long-term, short-term perspective. Valuations also fine versus peers, and a good, obviously, brand that comes in Tata Group. So that is there as well for Tata Capital. Somil, I know it's very short in terms of charts, but any view or opinion that you have of Tata Capital?
I think big name, the peers are doing great. NBFCs are doing great. The entire pack is doing great. In the very short term, I'll be expecting a target of around 340, 350. It has just, broken out of a small inverted head and shoulder pattern on the hourly charts. I don't have much data, but I think positive on the stock, and I'll be expecting good rallies on the upside.
Okay, thanks for that view on the technical front as well. Not much in terms of charts, but yes, a good name that comes in from Tata Capital. Next query for today, we have Venkat Sai, who's writing to us from Mumbai, holding shares of IRCTC, price as 921 rupees per share. He's asking if he should average or exit and book his losses. What's your view on this one, Sachin?
So IRCTC is a monopoly, right? So anything which is controlled by government, or you can say monopoly play, so there is always some risk over there that if some kind of disruption comes in or private players can come in, so that kind of risk will always be there. So but yes, in terms of growth, if we can say, I think that has been quite muted in last 1 year, but for last 3-4 years, the growth has been good. There is some news that the payment gateway, linkage can happen through IRCTC in coming quarters. So the management has already given guidance around that. If that happens, I think it will bring the new stream, new revenue stream for the company. Considering that, one can take some allocation, but we are not very comfortable in terms of valuation at this price. Even if we have seen good correction over there, I think these kind of stocks, if we find at a reasonable valuation, then only one should enter.
But should the viewer sell this one then right now or continue to just hold it?
Because it has seen good correction from the top, feel like that, if the management already given the guidance in the first quarter of 2026 that the payment gateway should start kicking in. So accordingly, I think some uptick may come at that point of time. I think it should be like they should wait for some time and then they can exit.
Okay.
So for a long-term perspective, we are not going ahead. But yes, in a short term, he should wait for some time.
Okay, wait for some time before you look to actually get out of the stock. Somil, your view on the charts and technicals, given that the stock has not done anything in the last 1 year, right? It's, just come down 15-20% approximately. What should the viewer do? Exit, average, what is it?
I think exit would be my strategy. The railway stocks are not doing that great. RVNL, IRCTC, not doing that great. Low top, low bottom formation. Since August, September 2024, this stock has not been able to go above 200 daily moving average, struggling to be above 20-40 daily moving average. Trend is negative. I'll be expecting a target of around 650, first target on the downside. And then if it does not sustain there, then the next level would be around 600, 580 levels. So negative on the stock, exit would be my strategy.
Exit would be your strategy here as well. Let's move on to the next query. We have Shiv, who's writing to us from New Delhi, holding Titagarh Rail Systems at a price of 887 rupees per share, asking whether he should hold or sell at the current levels. Your view on this one, Sachin? Titagarh Rail, they have had some execution issues. So what should one do?
So again, a railway stock, so see, we have seen from the government side also on the budget side. So the expenditure has been stagnant last year. So they have grown from 2.5 lakh crore to 2.60 lakh crore only. But 3-4 years back, we had seen the substantial uptick in the capex from all the companies. Even the budgeted amount was higher. We jumped from 2.10 lakh crore to 2.60, almost 2.50 lakh crore. So there we saw these companies, all the railway companies, performing very well for 2 to 3 years. From maybe FY22 to FY24. So obviously the froth was there in the valuations. Now that is almost done with. All these stocks have corrected very well. Some companies have come at a reasonable valuation, but some are still trading at slightly expensive valuation. You rightly said that the execution capabilities issues were there. Some external factors were there, but Titagarh Wagon and Jupiter Wagon, all these companies, I think they will continue to get orders on the new wagon manufacturing side. Again, we are not very comfortable at the valuations at this level. I think some bit of correction can again come in this stock. But if somebody is holding that stock and the stock has already corrected by 5-10%, it's not a bad stock. It's a kind of a reasonable valuations. The investor should hold for some time to see some uptick, and then they can review it again.
Okay, hold for some time, then maybe review it again. But as of now, hold. It's not a bad stock right now. Somil, your view for Titagarh Rail. Should the viewer hold or maybe sell? They bought it at 887.
At this point of time, it has been forming a triangle pattern on the weekly charts. Great stock to be in at this point of time, because this triangle is, expecting this triangle to break on the upside. Now the resistance here is 200 daily moving average, which is around 908, 910 levels. So if you want to take a new position, wait for the breakout about 910, 920, let it sustain, and then you can take a position. But if you have the position, I think you can exit and wait for the breakout. If once the breakout has happened, I think then we'll be we'll have a confirmation that a rally is started on the upside. And if it breaks out, the next level on the medium term levels would be around, target would be around 1120, and the next level would be 1370. So big levels big targets to watch out for. But at this point of time, exit, wait for the breakout.
exit, wait for the breakout, but then there is, once that breakout comes in, we can re-enter, and there are levels Somil has mentioned as well. Thanks for that. But on that note, we're actually going to slip into a very short break, but here's a quick programming note for our viewers. If you are looking for the big bets and market themes for 2026, CNBC TV18 Access gives you a direct access to White Oak Capital AMC's Ashish Somaya as well as Prashant Khemka as they share their winning market themes and actionable investment strategies. Ask your questions live on 28th of November at 1:30 p.m. Become a member today on the CNBC TV18 app or log on to cnbctv18.com. Access plans. Welcome back to your stocks in CNBC TV18. We still have with us Somil Mehta as well as Sachin, Jasuja, who are answering all the stock-related queries that you all have sent us. As of now, markets are managing to hold on to good gains. 26,200 is where the Nifty is at. So we'll be keeping an eye out on that one as well and where it's going. We've seen it cross the 26,200 mark right now. So that is interesting to watch out for. Keeping it going with those queries then, we have the next query that's come from Jay, who's writing to us from Gujarat. He's holding 100 shares of Vedanta. Price is 300 rupees per share and wants to know both short-term as well as a long-term view for Vedanta. Sachin, for Vedanta, obviously the demerger talks that have been around as well. So, what's the view now on Vedanta right now? Short-term, long-term, both story.
So I think because of the demerger news, the stock has done really well. Some value unlocking can happen. Even it was a upcycle for the commodities for last 1 or 2 years. And the stock has done really well. So I think if investors have made good money over there, because in commodities, it is never a long-term, investments. You have to, get into stocks where there is a down cycle and maybe you have to book at some kind of upcycle. You can't time it at what level it can reverse. So I think the partial profit booking is, I think suggested at this point of time. And if the momentum continues for some more time, I think even the full booking can also be done. So from the short-term perspective, maybe partial booking, but I think the stock has done well. The commodity cycle is up. If the investor is okay with 60-70% kind of a return and can go to a pure play companies like Hindustan Copper where the industrial demand is higher, so they can shift to some other names also where the volatility is less.
Okay. And your view on this one, Vedanta, what should the viewer do? They bought it at a good price, 300, now at 500. Somil.
Metal stocks are looking good. Vedanta definitely in the upcycle, trading in a channel pattern, have taken support at 40 daily moving average, has taken support at the lower end of the Bollinger Band on the daily charts. Great setup. Hindalco would also be my preferred pick. But Vedanta, very specifically, I think the stop loss should be around, for short term, the stop loss should be around 490. That will be my stop loss. And on the upside, I think the next target would be 540, 550 levels in the very short term. But in the medium term outlook, the stop loss should be a little lower on the weekly swing low, which is 467, little deeper. But my targets on the upside would be much higher than 650, 670 levels.
Okay, let's move on then. And Nifty Bank also, let's keep an eye out on that one as well. We have Nifty Bank at around 59,500 levels. Keeping it going with the queries then. Today's highest point with the Nifty Bank. But Nikhil is writing to us from Mumbai. It's an investment query. He's asking if he should buy Ceigall India for the long term at current levels. Sachin?
So Ceigall India, I think, came with the IPO a few months back. It's an EPC play into roads, railways. Now they have started, they have started getting orders into the renewable side also. But when you look at any EPC play, these are more of contract-based kind of things, and there is always uncertainty that, like it happened with Ceigall that due to floods, some projects got delayed. Then the results were not up to the mark. And the management has also, revised the guidance. I mean, they were saying 15-20%. Now it is 10 to 15% guidance they are giving. So what we feel like in this kind of, there is no strong mode in this kind of business, and the company is still small, and these are early days for the company. So what we feel like that, one can avoid, for a long-term investment, one can avoid One can review it after every quarter, can see how the company is evolving. But the bigger names like, L&T, Thermax, which are largely kind of capital goods name, I think they are, because they have got some recurring incomes also. So I think the, longevity of earnings is always there with the large companies in this segment. So would prefer that rather than the smaller companies into EPCs.
Rather prefer larger companies than smaller companies. Can wait and watch maybe later on in terms of the performance review, quarterly basis, how that's doing. Right now, avoid. On the technicals, Ceigall, Somil, what's your view? Given that, maybe it has just seen a downward move in this last 1 year since listing. So does it become attractive maybe to enter right now on technical fronts?
No, Vinny, I won't go with this stock. It's been struggling to go above the short-term averages as well. 20-40 averages, not been able to go above that. It's been trading below, 200 daily moving average since December 2024. So which is not a very good sign. I would exit the stock. Probably go into some large cap stocks, as you mentioned. L&T would be awesome. I think on the upside, if you want to really enter the stock, the right time to enter the stock would be 280, 290 levels would be the right time, just above the 200 daily moving average, and then revisit the stock above that, and then you can re-enter. But right now, exit would be my strategy.
Exit would be the strategy there. Let's move on to the next query. We have Bhuvan Sharma, who's writing to us from Chandigarh. 300 shares of JSW Cement, 140 rupees is the price. What should he do? Continue to hold or sell? Sachin?
I think he should continue to hold. Reason being, one, the JSW is a quite aggressive company. They have shown their execution capability. Now, this particular industry is, there are dominant players: Ultratech Cements, Adani, Dalmia Bharat, Shri Cement. So you can say these are 3-4 largest player, and the prices are already down in cement size. I think intentionally these are down so that the smaller players, can't sustain well. But JSW comes from a strong parentage. They have the plans from going from 20 million tons to 60 million tons in next 5 years. They can become a dominant player of the industry. I'm 100% sure that they will also go for inorganic growth. They will be acquiring some companies like Ultratech and Adani has been doing, and the stock has done. I think it didn't do anything in last 6 months after the listing, but they raised money. They will reduce the debt. They will also go for pan-India expansion. So because the capability is there with the management, we feel like that the company should do well. Optically it looks slightly expensive in terms of valuations, but yes, I think some leap of faith we have to give it to the management, and that is the reason they have entered that business.
Okay, so continue to hold here. And Somil, your view on this one? Should they continue to hold this or sell now?
I think I will switch to some larger names like Shree Cement or Ambuja Cement. Those are my preferred pick. For JSW Cement, I don't have much chart, but it's on the downtrend on the weekly, monthly chart. So absolutely exit on the stock.
Okay, and let's move on to the next query. We have Arpit Garg, who's writing to us from Noida. 150 shares of TCS, price is 3,500 rupees per share. Wants to know whether should continue to hold or exit at current levels. Somil, on the charts, should they look to exit right now?
TCS is one of my favorite picks in the IT at this point of time. Has just come off 20 and 40 daily moving average. It is inching towards 200 daily moving average. It has completed a corrective cycle on the monthly charts, which is a very good sign. Monthly positive close. I'll be expecting a short-term target of around 3,300, and then the next target would be 3,500. So if you have this stock on your portfolio, keep holding it. Even in the short term, I think the stop loss should be around 3,100, and the targets in the short term would be 3,300, 3,050. So keep holding the stock.
Okay, keep holding the stock. That's the word on TCS right now. Let's move on then to the next query. Sachin, we have Vansh who's writing to us from New Delhi, holding 50 shares of HBL Engineering. Price is 650 rupees per share. Continue to hold or look to sell this one?
So there is a disclaimer: our investors may hold this, stock. So we are quite positive. We have a positive coverage on the company. And see, HBL Engineering is into industrial batteries. Almost 70% of the revenue comes from industrial batteries, where lithium ion is also a growing, and from the railway defense also they have started getting orders. So what we feel that segment is very sweet. There are strong tailwinds. in that particular industry. The valuations are reasonable. The company has been growing. It has become a multi-bagger in last few years, and I think it will continue to grow. So I think one should hold it. If somebody is invested, even if they are making good money over there, I think there is long runway for growth for this company.
Okay, long runway of growth. Continue to hold the stock. That's the view coming in there. But Sachin as well as Somil, thank you so much for joining us and helping our viewers solve all the stock-related queries. Viewers, thank you so much for sending us your queries as well. Keep sending us the queries on the email address that is at the top of the screens for you all. But with that, we are absolutely out of time. Thanks so much for tuning in. Up next, you have Closing Bell to take you through the last hour of trade.